What happens when a top performing bank specialist walks away from a secure six-figure job and bets on himself instead? In this episode, I have a candid conversation with my friend Justin Chausse, and he shares his journey from running a very successful landscape business to being a bank specialist in the mortgage space and then becoming a mortgage broker, and what he's learned through that entire journey. A couple takeaways from our conversation: why bankers, if you're a bank specialist and you have self-sourced business, you have massive leverage that you probably don't even realize. How brokering, being your independent broker, allows you to build your own brand. How he turned down a six-figure signing bonus and says he's never regretted it and made way more than that because of the way that brokers are paid. They get paid more per transaction, as well as the tax efficiencies of being self-employed. All of this to say that this conversation with Justin is fantastic. If you are in the bank space and you're thinking about making a change, I think you're going to really enjoy this conversation. Hey, I'm Scott Peckford. This is the I Love Mortgage Brokering podcast. And each week we bring you new guests to share insights, conversations, tools, and tactics to help inspire you to build a better mortgage business. Before we jump into this episode, I want to give a shout out to our sponsor, Ownwell. Ownwell is an amazing tool for Canadian mortgage brokers. One of the tools that you can use as a mortgage broker, one of the many tools that's available. And what it does is it allows you to send these amazing reports to your borrowers, your past clients, and it gives them the buying power, the equity of their home, their buying power, if there's options for their mortgage, and it creates tons of conversations. The open rates on these are 60 to 80%. They're amazing. Check them out at ownwell.ca/Scott and check out this conversation with Justin. Hey, Justin, welcome back to the show.
Hey, thanks, Scott. Thanks for having me.
Hey, so today I'd love to chat. Tell me, I guess before we jump into some stuff that I want to chat with you about, tell me a little bit about yourself and how you got in the mortgage biz. So if anybody hasn't heard of you before or you had seen you've been on the show.
Yeah, so I actually kind of joked that I got into the mortgage business by accident, to be honest with you. In my previous life, I had owned a landscape business. So literally played in dirt for a living. As I say, we were fortunate enough to, as the mortgage or as the landscape business rather started to evolve, kind of got to a point in life where, we were needing to make some big changes in the business, some big capital investments, and life for me was changing. So, I was getting married. We planned on having kids, doing all that sort of stuff. And it was just something that my passion wasn't there for it. We were very fortunate that the business grew to where it was within the 10 years we were in it, but it was never a forever plan. So the landscape business for us, we were able to sell it. We sold the landscape business, and I was at the time, what am I now? Yeah, 43. So at the time I was 30 years old and unemployed, with nothing to do, and knew I wanted to make a career change. Banking was always of interest. So I literally applied for every job in the bank, right from a teller to the mortgage advisor role, with multiple different banks. And we ended up getting a phone call that, hey, have you applied for this position within a bank? It's the mortgage role. Yes. Started down the path of the hiring process with them, and we were very fortunate enough to have I was fortunate enough rather to get the opportunity. And the way they worded it to me was, "We're going to give you a shot. We can teach you mortgages, but we can't teach people how to grow a business. So we'll give you a chance." And off I went. So was very fortunate to go from.
Like, and then how long did you do that before you got into being a broker?
So I was with the bank for 6 years. I've been doing mortgages now for 13 years. It'll be 13 years this December, which is crazy to think that I've been doing it for that long. I was with the bank for 6 years and then brokering for the rest.
And then, how many files were you able to get that up to as a? Do you remember when you were banking?
I do.
As a bank?
Yeah. In the peak of our business with the bank, we did 185 files. 185 or 187. I can't remember. Right. And that was all with no support. That was with no support.
And then you switched over to being a broker and you haven't looked back, right?
Haven't looked back. No. I've had a lot of, when I made the move, made the transition, I was told that, hey, it's going to be tough. You're going to have bad days. You're going to have days where you're going to look back and go, what did I do? I've made a mistake. And I have to say that I have, from the day that I resigned with the bank to this day, I've never had a day where I said, "Oh my goodness, what have I done? Why did I do
this?" That makes the wrong right? Okay, so I have a question for you. So I assume that when you went from banking to brokering, your file count went down. Yep. And do you remember that? But what happened to your income? Because there's a difference in pay. There's a couple things when people know. One, obviously, you get paid less And the second is there's tax implications of how you get paid. So maybe walk me through what you noticed in your own personal life with that.
Yeah. So I think a lot of it for me, it was very interesting. When you work for a bank, and it's probably no different in this space, there's people calling you all the time looking to recruit you to come to their establishment and do different things. And it was really funny because I sat with every single recruiter or regional vice president, whoever it was, that had approached us. And I always had one question, and it was, show me how to double my business. And it was very, very funny that none of them could answer that question. Mm-hmm. So none of them could answer that question for me, except for one person. And it was towards the end, which was when I was making the transition. There was a lady that I had met with, and I said that, show me how to double my business. And she sat and, hey, you can give me a week, and then the week came. She was great, called me, give me another week. And anyway, she sat down and came up with a plan that could show me how to double my business. And it came with very, very, very lucrative signing bonuses to make the move. And when I did that, I remember coming home, my wife knew I was kind of chatting with this person. And then when I came home, I said, sitting on the couch, after the kids went to bed, 9:30, 10 o'clock at night, I said, hey, I got to talk to you about something. Like, I'm leaving the bank. She's like, you got to be kidding me. I thought this was just another thing that you were looking to do. I said, no, like, look at this compensation package that I have. It's very lucrative. And I'll never forget my wife looking at me and going, I didn't know you were actually serious about making this move. And her exact words to me were, I'm getting choked up saying it because it was, I'm appreciative for the support, but she sat there and she said, you told me you would never make a decision based on money. And you're making a decision right now based on money. We know you're headed to the broker space eventually. Why don't you do it the right way? Bet on yourself, go all in the broker space. We will be fine, and make the move and go to the broker space. So that's what we did. Now, from a compensation perspective,
so this other person, was it a different bank that was going to steal you?
It was a different bank. It was a different bank
because you're doing 185 files. You're working for one bank. The other bank's like, hey, this guy can sell. Let's steal him. But you're only trading one other person's brand for another. You're not building your own brand.
Yeah, and I do have to give her a lot of credit because I said, show me how to double my business. And there was a well thought out plan on how to take my volume and double it within, a 2 to 3 year period. So very well thought out. It was the only person I've ever spoken to that was able to do that. Along with that came a very hefty signing bonus, like 6-figure big bonus, which in my opinion, was shocking to me. I didn't think that would, I'd ever have that opportunity to have that offered to me. But it was really kind of sitting back and assessing. Now, the bank that I was with, and I think most banks kind of operate this way, is the compensation is different whether you self-source the business yourself. So self-source being you're out in the community, being the hunter-gatherer, bringing business to the bank that otherwise would not have landed at the bank. So you're talking to real estate agents, you're talking to different COIs and bringing business in. And for that, we got paid 100% of the comp that was offered at the bank. And then there was what was called branch source business, where the branch referred you the business and it was, you still got paid, but it was at a discounted rate. So for me, I was very fortunate. And that was part of the agreement that I had with the opportunity with the bank was, you're not coming in here. You are not allowed to step in a branch for 12 months. You need to prove to us that you can go build a business and do that. And we were very successful in doing that. So our business right out of the gate,
they made you become a hunter instead of relying on being fed deals from the branch.
100%.
Right.
And what happened in that is year over year, and it varied as the business evolved and we started getting branch business where our branch or our self-source business, as they call it, was anywhere between 63 to 70% self-source business year over year.
They love that.
And it was, but they really make you think that you cannot survive without them. The banks make you think that you can't. We built you. We helped you with this. You can't go out and do it on your own. And it was kind of a moment in that same moment of chatting with my wife that evening was, her saying like, what is your self-source business? Well, it's 70%. Well, you make X. what if we took away the branch business and you went to the broker space? What's the comp in the broker space? And as we calculated that, it was actually more money to do less business and just, continue to do what we were doing
because
every day.
Could self-source,
because we could we had a business that was built on self-source business, right? And in transitioning over, it was really funny. Again, you don't know what you know, but when we made the move, we did not see it. We saw a small drop in income in the first year. I'm not going to lie on that. We saw a small drop in income just through the transition, but nothing that was detrimental to our lifestyle, right? It was just, we knew what it was. It was just a little dip in the business, maybe 15, 20% of income. But again, that was nothing that was detrimental to our business and our lifestyle. And I'll come back to why it was not, which was the tax implications there. But it was very much, when we started going out and talking to our partners, it was eye-opening to me because I realized that I was really only their mortgage specialist for that particular bank. So although I was going out and sourcing business, self-source business, a lot of my partners, unless it was a first-time home buyer with no relationship, a lot of them were asking, who do you bank with? And then I quickly realized that they had a contact at every single bank. And if they couldn't sway them to a broker, it was path of least resistance. And I was just their mortgage person for that bank. And they had someone at another bank and another bank. So I really wasn't taking full advantage. And when we made the move and went out in the broker space, very quickly realized that they're like, we love dealing with you. We just couldn't get you any other clients if they weren't tied to that bank. So after a year or two, we actually saw an uptick in business because we were getting more business from those COIs.
So COIs essentially were only sending you stuff for your bank. Correct. And now you had the ability to, and you also had more options too. There's just more. There's a broader, tool set.
Yeah, and from a tax implication and a business standpoint, again, one of the big differences which was eye opening to me. I knew you could do it, but didn't understand the full effects of it. Was being able to incorporate. So running our business as a business, we truly were a business where commissions went in. We paid ourselves a salary. And then there's other tax implications and benefits that come along with that. So, working for the bank, we were, let's call it taxed at 50%.
So it's because it's employment income, right?
It's employment income, right? So all that income that you don't have the same ability to do any tax planning and or to have expenses before you get paid. So reduce that taxable income or do dividends or any other sort of creative things. Yeah. And it was crazy. Like I kind of knew that stuff. So when we left bank, went incorporated into the broker space, sitting down with accountant, financial advisor, all those people that were kind of on our own personal home team, it was all of a sudden, hey, you can start to, life insurance was looked at differently of how it was paid. And there's all different benefits of how, we were able to build wealth for our family and for retirement where we actually weren't making less money. We were making more, and it was considerably more lucrative to be on the business side, operating a business.
Okay, I don't know if you know this. I'm going to ask you a question you may or may not know the answer to, but when you did 185 files, and if you remember what you got paid, how many files did you have to do on the broker side to equal that amount of pay? You remember approximately?
Well, I can quickly calculate it for you here. That would have worked out to 60 files to make the same amount of money.
Right. So it's like a third, essentially.
For us, it was a third. Yep. Yeah. And it was stress level immediately went down like to nothing. Because we were doing a lot of files and we had a lot of attention within the bank, you were getting pulled in a lot of different directions. There's a lot of just those corporate meetings that you need to be on. There was just a lot of added stress and things that needed to be there where when I made the move, it was really just, you know what? I can focus on me and I can focus on my business, which is what I wanted to focus on, as opposed to the other obligations that we needed to do within, being part of a corporate organization.
Okay. So it sounds like, obviously there's the financial component. You make more per transaction. There's more options in terms of product. If you're a bank specialist who knows how to self-source, you're probably sitting on a gold mine, don't even realize it.
100%. Yep. It's just a mindset thing that you think you can't survive without the bank, right? I mean, I speak to a lot of bankers now, and I talk to them and I'm like, well, why, like, who have successful businesses, and say, well, why aren't you making the move? Well, I got my, my stock options. I got my pension. I have all these things. And I'm like, well, do you understand how much money you're leaving on the table? Like, always bet on yourself. Like, they're holding you handcuffs with those stock options. And I remember when I made the move, we got a call and it was like, well, you're leaving, 6 figures on the table from stock options. And I'm like, am I really? Because I can go make that. I can make that back in a year. Right.
Yeah. So kudos to your wife for having that conversation with you and reminding you of what was ultimate better for you and your family. So good on her for that.
100%. Yeah. And I wouldn't be here without her. I wouldn't be here without her. So I think if she didn't speak up, I would have made that move. And I think it would have been a lot more detrimental to my business.
You'd have been locked in there. And you'd have been, back to the point you said before, you'd be building their brand. So what are some of the other benefits of building your own brand versus building the bank brand? Tell me what have you noticed, and what are the benefits, and then what are some of the things that you get to do now as a broker that you would not have been allowed to do? And I think we talked like email marketing tools, that kind of stuff.
So I think there's a lot of things that you can do. So different tools that you can use, right? Is you can partner with different companies and different softwares out there to add more value to your clients and to different partners to win the business, right? And service your clients afterwards. One of the big decisions why I had left the bank is we were sitting there and it kept plugging away at me where they kept saying, like, it's all about the client experience. It's all about the client experience. Yet the process that the bank had a lot of sticky points in it, and we had to follow that process, and it was creating a lot of frustrating clients, creating a lot of frustration for partners as well. So in this sense, it's really, and I kept saying, like, no, we can't change it. We can't do anything with the bank to make these changes because this is their business. Where for us is, the line I always use is, we are now profit for clients, not profit for shareholders. And we use that line a lot with our clients is, for example, when the bank, we were handcuffed where we would do a great job for a client and client would come back to us, looking for us to do something. But the whole idea was for us to bring that client in, and we actually were not allowed to touch that file again after we've completed the mortgage and built that. Now we've handed that relationship off to somebody inside of the bank. Right. We were not allowed to touch that file again. And it was like, well, you can't touch that file. It's not the way it's supposed to, that's not the way it works. Just go find a new file. So we were doing all this work, building the relationship with a client.
But we both know that file, if you get to do the second file, they've got family, they got friends, they got coworkers. You're going to generate business, but you don't get that opportunity if once the first file is done, you're not allowed to work with them anymore. It's a lot harder anyway to generate. It's a lot
harder, yeah. So that client for us now is not just a one transaction. We get to nurture and service that client for the remainder of the life of their mortgage, right? So,
okay. So a lot of opportunity profit for clients, not for shareholders. You talked about you build your brand, not the bank's brand. You can choose the tools. So how is the having flexibility with tool selection been helpful for you or given you?
Yeah. So for us, I mean, there's just different things that come in. So one from a marketing perspective, right? However you do that, you're able to say things that are in your voice, right? In the bank, we wanted to do, I mean, maybe it's changed a little bit now, but when we were doing it, we wanted to do social media. We wanted to do, let's call it SEO, and attract more leads and more stuff that came into the business. We wanted to see different tools that could help service clients after funding. That was not, you had to get bank approval, go through all the red tape, and nothing ever progressed. Where here we're able to do a lot of things, or in our business at least, where we can build our brand. So we can go out and work with companies that can, SEO, for example, drive clients to our business. We can use tools like Ownwell to service clients afterwards, where we're able to provide them value, which is, what's the value of your home? future savings opportunities on your mortgage, what you're qualified for. You are not able to use those things at the bank because it's not proprietary to the bank. So a lot of value add service stuff that we're able to do afterwards. And we're able to use a lot of those tools to go out to our partners to show value as well, gain trust, help them within their business to bring more business to them, which ultimately brings us more referrals as we're servicing them and showing them that we're here to help them build their business.
Right. So, okay, what are the cons? So like, I know that you're all in because it's for you. It's been an amazing experience. Sure. There's been challenge like anything when you start when you building your own brand and your own thing, but what would you say are some of the cons that you noticed from being at the bank versus the broker?
Great question. Because there certainly are some, and I spoke to a lot of different bankers that do come over to the broker space. And a lot of times they kind of feel like they're lost, right? Like, oh my goodness, if you are successful within a bank, usually what's happening is you're getting a lot of referrals from the financial planners or the high net worth, the financial planners in a bank that are dealing with the high net worth clients. Not to say that doesn't happen here. You're able to get it, but it's kind of developing different relationships with people outside of the bank's network, right? So, a lot of the stuff or people that I see is like, oh, we dealt with a lot of doctors and we understand the policy at a certain bank because that's what you've done for 6 or 7 years. Not to say that those aren't offered still within our channel, but it's a matter of now you need to go find those clients and they're not just getting handed to you from the bank, right? So to a certain degree, you almost kind of got to go out. I want to say reinvent yourself, but just kind of get out and put the word out and source those files yourself through different referral sources or COI because you're not as reliant on the bank. The other piece is I think the bank, when you work for a bank, you understand their one particular policy. And I always say the banks make you lazy because they want to make there's a lot of things that you don't see behind the scenes that kind of happen on a file. And here you need to understand what those are, right? So you need to understand different lenders' policies, different products, different things that a particular file will fall in. And then there's a lot more work that kind of goes into that file as opposed to just take it in. Everything pulls from the internal system, within a bank. It all, application gets built, sent out, goes into underwriting, and then everything kind of happens behind the scenes where you now need to understand the mortgage process a lot more
beyond just the sale, beyond just taking an application. Is the way I would say it, right? Is just, we were just order takers at the bank, just take an application, fire it off. And it's like, yes or no. And then, I mean, there is some thinking, obviously, but I'm making it sound too simplistic, but okay. So I would say what I've heard too, when I talk to banks, people that have moved over, is that they really understand their bank's policies, but they don't know the difference between, okay, is this a home trust deal or a Scotia or a TD, or is there a different lender, Equitable? And how are they going to look at this? And so that's where their challenge is in understanding those programs and policies to find solutions. It takes a bit of time.
Correct. Yeah. And I know for me, when I came in, and even in speaking with a lot of people that come over, is, you always hear people even put it out there. I'd love to move to the broker space because I have so many options. I have whatever it is. Everyone says a different number, 50 lenders, 72 lenders, 100 lenders. It's really, that can overwhelm you when you're starting to.
But the truth is, how many do you really use? Like if you think of the business for the last 12 months, how many lenders do you think?
5.
We
use 5 lenders.
Once you understand, you probably need 5. It's like you don't need 50 golf clubs in your bag. You need 5, and they'll solve almost every scenario that you're going to come across.
That's right. Yeah, and again, everyone comes in. I think people come into the broker space thinking, oh, we're going to get the best rates and we're going to be able to do this and we're going to be able to do that, right? Because in the bank, you're always thinking that brokers have the lowest rate, which isn't always the option. But again, now you're able to tailor and advise the client a lot better as to why this would be the best solution for them, why this lender would be the best solution for them, even if the rate is just slightly higher, because you've been able to listen to them, ask them the right questions, discover what their goals are, and then be able to provide them with a solution. As opposed to at a bank, you're just you got one product to sell. You just jamming it. Hey, you got to take this. You got to take this.
I want to make sure I highlight the fact that you don't actually need 50 lenders. And in fact, there's no really successful broker that I know that works with 50 lenders. They tend to find none. Like you'll have 5, and of the 5, there'll be 3 that'll get most of the business. And you'll have those other 2 for those ones that are outside the, and it'll come down to understanding their policies, building a good relationship with that lender, that underwriter. Because again, relationships, even though there's policies, there's stuff that they'll do for you sometimes if they like you and you have a good reputation that they'll say no to someone else for.
Absolutely. The lenders that we deal with, we have really solid relationships with. It's extremely beneficial to have them kind of in our back pocket because, if we have a tough file or we have something, we're able to pick up the phone and have a discussion before we even submit, right?
Yeah, and package it in a way that...
How do you want to see this file, right? How do you want to see this file? And I'll take it even a step further from a business perspective. I'll give you an example where we saw a little bit of a dip in business a few months ago, and sitting kind of going like, man, what am I missing? Why? What am I missing here? And it was a matter of being able to pick up the phone to an underwriter who we have a good relationship with, and we called all 3 of them that we send majority of our business to, and what am I missing? What type of files are you seeing come across your desk? What niche are you seeing right now? So being able to
used to do that. They always knew. They're like, because if brokers, I always say they'll find, if there's a angle to opportunity, they'll find it. And sometimes you reverse engineer it. So what did you discover in that conversation?
So in that one, that was, I wouldn't say that one was more of, you're not missing anything. Right. Okay. In that
but
one,
there has 2 or 3 times though where you do find,
but
I found
if you want to go back 12 months ago, it was 12 months ago from today. It was, hey, what type of files are you seeing come across our desk? Every file we see come across our desk is anyone that took a mortgage 12 to 18 months ago when rates were high. There's opportunities to pay a penalty, switch them over and save the client money. Great. Right. And that was coming from lenders we were taking business from, right? And switching them. But she's like, these are the files that this is a little rush here, right? This is the trend. This is what we're seeing. So jump on it, Justin, and roll with it. So we wouldn't have uncovered that had we not been in direct contact with our underwriters and had a good relationship with them for them to be able to share that with us.
Right. Yeah, I found that having those conversations with your lender partners, you can find out a lot what's going on. It's like, why is everybody using this product? What have I not seen in this product or this, and then you start looking, and then you're like, oh, I see where the opportunity is. And then go out and you can start to communicate that to your clients and to your COIs. Yeah. I think it's a brilliant point. So one of the things I know that like at our brokerage, you coach our banker program. And so what is kind of sort of been the big takeaway that you've had from working with these people that are making the transition?
Yeah, that's a great question. So if you want to kind of go back to, this will lead back to your question, I think, where you asked about the cons, is I think that a lot of people that make the transition is they come over to the broker space and you get so many, as much as there's a lot of opportunity and different tools that you can use within your business. I think people get overwhelmed with trying to do too much. And I think everyone kind of leaves the bank and they're super excited, hey, I can run my business the way I want. And they take on way too many new projects all at once. And they start to overwhelm themselves. So I think the biggest thing that I see in the coaching is people taking, and I fall in, Scott, that I fall into this trap better than anybody, is really keeping the business simple. Keep your business simple when you make the move. What is the success here? There really is no fancy tool, even though they're valuable. They add value to people, but it's, offer honest, truthful, solid advice to your clients. Show them that you're profit for the client, not profit for the shareholder. And just continue to have good, honest conversations and do the basic things, good, honest conversations with referral sources, with clients. You're not going to be speaking bank talk because that's what you're trained to do. You can really kind of go out and put your own voice on it, really, and advise clients in a way, and you can run a very successful business, again, by not overcomplicating it. So I think a lot of people in that transition when they come in, whether you're leaving a bank and coming or whether you're a brand new broker, there's a lot being thrown at you. And it really is just a matter of keep the business simple, really work on just the conversations you're having with a client, get better at those every single day, get better at the conversations you're having with referral sources every day, and put yourself out there. Yeah,
that's so good, man. So where can people find you online if they're looking for you?
Yeah, so people can find us online at on Instagram. Justin Chausse Mortgages is probably the best bet. Instagram, website chaussemortgages.ca. It's kind of the best way to find us.
Do you speak French?
Well, I used to speak French. We have family that's still in Montreal.
Okay, because Chausse is a French.
It's very French. Right? Yes. Yeah. So we have family in Montreal. So when we visit family in Montreal, they speak French, we speak English, and everybody understands each other. So I can understand it, but my speaking of French is not the best.
Right. Okay. I was just curious. I don't know why. It's just funny. That's my ADD. I'm like, I have to ask this question.
We get asked that question all the time.
Right.
So.
Okay, man. Well, hey, awesome chatting with you. Thanks for coming, and you're absolutely killing it. And I love your advice is spot on from what I've seen.
Thanks, Scott. Always enjoy having these chats with you.
Hey, thanks again for listening, and hopefully you got inspired by this. If you are a bank specialist or know someone who is, I recommend you forward this episode to them and say, hey, listen to this, and let's chat about what it would look like to be on the broker side versus the banker side. There are, as Justin said, there are pros and cons, but on the whole, if you are a bank specialist who can self-source business, if you want to build your own brand, if you want flexibility in your tools that you use and how you run your business, maybe being a broker would be the way to go. As I mentioned briefly in the show, Justin is one of our coaches at Bricks. We have a fantastic program for banks. We love bankers. And the big thing, the challenge that we find that bankers have is that you know how to do business, you know how to find business. It's like, well, how does it work at this lender versus that lender? And so we have some fantastic support that's scalable, that allows you to use while you need it. And then when you're ready, you can go flat out on your own. Reach out to us, reach out to me directly, or reach out to Justin. You want to talk to him. Thanks for listening to this episode. As I always say, there's no problem in your mortgage business that someone else hasn't already solved. Your problem is who's got the answer. The goal of these podcasts is to provide some of those answers. Thanks for listening.